The market always gives and it always takes. So I don't have any problem about this hitting my stop loss. I don't have any problem about the market chasing hunting my stop loss. I accepted it. Pretty final, I entered the market knowing that if I'm going to lose only 8% on this position, that's all. So let's break down on what happened, how it came, how the position came to be, how they were stopped. 7 a.m. in the morning, 31st October 2023, opened a long position on Ethereum. The rumor is we're in the bull market. A trend is our friend. We never trend against the trend. The best friend is a trend. Unless when you are a trader who is a random trader. But even random traders, they have to find a trend. A trend is our friend. Guys, come on. So, one of the few basics before entering any market. One, you have to know the trend, where the market is flowing. You have already your strategy with you. Why don't you capitalize on that and then make money out of the market? Guys, this is not a get quick rich scheme. If you put work, you're going to leap off with time. This is not magic money as people think. Crypto is a scam. What? Who tells you? Bro, come on. You're shaming us. So let's analyze our trade, how we entered. So stop loss set at 17. It was at 17.56. Entry 17.76. Take profit 18.95. Breakdown. From a bearish pull back from yesterday, today the market was testing our areas of support. So 7 a.m. in the morning, the price action was so bullish. Remember, we trade price action volume, and then we capitalize on that. We don't use a lot of indicators when we are entering the market. So we trade price action. Price action is understanding the psychology behind the candlestick patterns and chart patterns. These chart patterns formation are followed by candlestick pattern formations. Once you master that, that's price action. There are two types of price action. There is a consolidative price action, and then there is a trending or a continuous price action. So when the market is trending, that's price action. When the market is consolidating, that's price action. So if you dig down and then you go into details from a top to a lower time frame, you'll have to know where the market is flowing. This is like, if you know the river is flowing towards the south from the north, then you have your boat ready. Just jump in and then put your boat into the river and then flow on the same. So on the crypto side, be it forex or what you're doing, it's the same basics. They are applicable to each and every market. Remember, guys, we trade a few pairs. We trade Ethereum, we trade Bitcoin, and then Dogecoin. Those are the 3 coin trade. So our entry was, as I've reckoned it, 1756, 1776, and then TP was 1858. But today we have hit our stop loss. The market was a bit maybe consolidative, but since morning, if you can withstand a long-standing trade, you can hold it for a long period of time. We use a 4-hour time frame as our higher time frame, and then we always execute on our time frames, the 15 minutes time frame, and then the 1 hour. So from morning up to now, we didn't make it. We moved on. So as we are saying, we are breaking down this position. We said we entered the day today 31st October 2023. We entered the market in the morning hours. we closed it evening hours. So we have the betting average. Betting average is a percentage of your anticipation, which is realistic. If you think your trade is 100% a win, then that's a wrong, 100% a wrong betting average, guys. You must know your betting average. If you don't know your betting average, you are not realistic with your positions. You don't know what you're doing even. So these trades are produced by Him Crypto. If you look for Him Crypto from the YouTube channel, you'll find it. The trade was a long trade. The capital in crypto, don't mind about the capital you're trading with. Only mind about percentage pull from the market. I think you understand that. So we put 15 leverage, 15x leverage. We don't go beyond 15x leverage on futures. So on risk management, we were active risk managers. We actively manage our risk. And you find that when you're active managing your risk, you'll sleep like a baby. You'll not have nightmares when the position is against you and you find like, oh, I lost my position. Where? Guys, come on. Have your trade based on your trading plan. So remember, guys, there's something called liquidity levels. When you enter any futures position, a perpetual contract, you have liquidation levels. Why do we have liquidation level? You'll find that if you don't put liquidation levels and you don't correlate it with your stop losses, you'll be wiped out. Your entire capital, your entire position, you're going to be wiped out if the market is against you. So that's why you need a stop loss. So the best here, when you're having a long position and your stop loss is below the liquidation level, you're doing what you don't know. Your stop loss must be above the liquidation level. Liquidation means you're going to lose your entire account. Let me tell you one secret. Before I started trading, I wasn't get stopped out, like hitting stop losses. But I was getting liquidated. I was getting margin calls, guys, bro. I was getting margin calls. And I could just receive emails that your position is getting liquidated. Like in 2 hours. Fund it, and more money. That's what it means. So the secret is have your stop loss set before you enter in a trade. Predefine your stop loss, and the rule of thumb is risk only 1% on every position. Be consistent with that. Don't go beyond that one. So liquidation level was set because we predefine our entries and stop loss and take profits. You know what's going to take place. We are not gambling. This is not betting, guys. Come on. So the shares, this position had shares, but if you want to know your shares, get your trading capital and divide it by your risk. You understand? Get your trading capital, divide it by your risk. If you're risking only, let me say, a certain number of pips, and then you are trading with $100, so you get your $100 divided by that kind of risk you're going to take. So you'll have the number of shares. That's your share. So entries predefined, take profit predefined, these exit plans predefined. Everything must be predefined and realistic. They are achievable. Except when you find that you have a market and this market is pulling up like a rubber band pull. The market is seriously pulling. So you don't limit yourself from taking profits when the market is pulling crazy like nothing. You try to put your TP a bit above, but when you know that if it pulls up once, you can maximize on that in terms of profits. And then you must be something that your betting average says 30% is realistic, and it's making you like a PT, profitable trader, not a losing trader. So if you're losing trader and you don't have realistic betting averages, my friend, you don't know what you're doing. So the time frame you're trading, we execute our trades on a 15 minutes time frame. We break down to that level, and then we with a higher time frame, we maximize. When we zoomed out, we maximize on a 4-hour time frame, because these trades usually, the market these days doesn't have crazy percentage movements in a day. Even Bitcoin no longer does that. So we journal our trades, and then we move on. If you don't journal your trades, my friend, you don't know what you're doing. Maybe you're gambling. And this is not a gambling space. Other people are saying that trading is difficult. Yeah, what? Because you don't have this, guys. You don't have this. Journal your trades. Have a trading journal. If you can't find it easy, have your screenshots with you. If you can have screenshots, maybe you go back and analyze them later. Well and good. But for me, I can do everything based on my time frame. I can journal on this, if you can look at it. As well, I can journal on the Google Sheets, provided that I'm monitoring my trades, I know what I'm doing. So let me wish you peace. Subscribe to the channel here in Crypto. Hit the like button and give a like. Let me wish you